Hello, everyone. Steve Ankerstar here, and thank you so much for listening in. Pretty rough day in the market today, so I wanted to get this out to everybody because I might be wearing on your minds. I've not put a lot of videos out lately through this forum out to everybody because it really hasn't been a big deal. Today is a little bit more of a deal, and tomorrow will certainly be the more interesting move. So to see what happens there. So I want to share out a few things to you. First of all, the disclaimer, so let's get that out front. There we go. It should be filling your screen. I call this a market conflicted. You're right. I don't know where it's going to go. I do think we do the election, we end lower at the end of the year than we are right now. And I'll show you that on the chart, what I think is going to happen. Again, no crystal ball. But before we get too far into it, there's all my information and there's my disclaimer. If you're not a current client of Afterburner Financial, then you have to do your own due diligence before acting here. If you are a current client of Afterburner Financial, I sent out to most of you, it's kind of an automated system, to the kind of stress test. What are you thinking about the markets? That sort of thing. So this is an open invitation. If you want to talk, then set up contact me through email, text, call me, whatever. If you want to talk, let's set up a time. My calendar is pretty wide open as far as being able to be available to each of you to be able to talk. So again, that's for clients. If you're not clients and you can follow along, I have my podcast out there, which I put something out almost every day. And then I have my morning brief, OTOTnow.com, if you want more information there. That's a way, if you're not a client, you can follow along exactly what I'm saying and thinking on a daily basis if you are interested. And if you're not, that is okay too. But let's talk about where we are in the market today. So sharing out to use the CNBC screen. So there's a pretty big ugly numbers from today. Now I will tell you that there are a handful of stocks that are driving this market. So when you think of, is this the market freaking out? It's not the market freaking out. The market is going to come in, no doubt, because of the election and potential tax reform with a Democratic either presidency or a Democratic sweep, or what that might look like. So that's obviously going to force some repricing. When you look at the numbers here, this was kind of led by tech. So again, that's 3% down on the NASDAQ. Apple, which is a name that I love. It's my top holding in the book, top holding for many of you, unless you're in retirement, then that would not be appropriate. For that to be your top holding, you can still have some, but not a huge amount, like a lot of us do. So a pretty big hit when Apple slides 4%. But don't forget how far it's come so fast. It also needed to come in a little bit. And then volatility's up, as you can see over here, up to 128. If you're going to trade this, which again, most people that are listening to me here are not traders, long VXX is kind of the way to go on the big down days. So really, when you start thinking about things that are going to drive the market to sell off, well, Dr. Fauci back in the news, maybe not about, we're going to have a vaccine, but maybe not for everybody until April. Well, crap, that's not what we were thinking. We've been hearing mostly good news of it's going to be out by November and it'll be able to be mass produced. So jury's still out. We shall see. I know you would rather, under promise and over deliver. I believe in that myself, but he's probably being an honest agent here with what he knows. So obviously when there is a vaccine, think about how it's going to go out. It's going to be first responders, healthcare industry, and military first, right? Then it will probably, I don't know, but if, logic, common sense would tell you it's going to release out to those in a high threat, high risk area. So thinking elderly or possibly pre-existing conditions. So really when you talk about folks, which is a large portion of the population that are healthy and below the age of maybe 60, wherever you want to draw the fence, we'll be the last ones to get it because we're the last ones that need it. So just process that. Sure, you'll be able to pay up, pay up and cut in line like, the movie stars kind of do. But that's going to be a separate mechanism. When you talk about it flowing through your standard insurance out to all of us, it may take a little while. So we'll see. As far as I talked about just a few stocks moving the market, look over here to the left. Tesla had battery day yesterday, and if you follow along with a lot of the things I say, Tesla stock is overpriced. It's down at 380 today. It was up over 500. It's been kind of ridiculous. I have a valuation on it below 100. So if they were to produce cars like an actual car maker, then it's below 100. It's just ridiculously overvalued. But then again, this is a real popular stock with the Robinhood crowd, which has been growing. So when you think of the masses that are out there, that not just millennials, but a lot of folks from the millennial generation, or Gen Z, however you want to call it, are buying individual stocks. I think that's going to be good for long term because they kind of understand that's the most efficient way to invest. So I like that, and I think it's healthy. And a lot of folks are starting young, so that helps us as a society. That folks are saving, investing at a young age, because that's what I hear predominantly is the first thing out of everybody's mouth is I wish I would have started younger. Well, we do have a lot of folks that are cutting their teeth in the market. However, they're all kind of buying the same stocks. They're buying Tesla, they're buying Apple, they're buying Amazon and Google, Facebook, I mean, Netflix, kind of period, right? Those are the big names that are out there. So when Tesla had battery day yesterday and Elon Musk got up there, he was dancing, if you saw that. Dancing, but he also said it was a very sober presentation of we are not where we want to be on battery technology, and that has been an issue for years. You know that I've had a lithium theme for years of a limited amount. It's how to mine the lithium, how to create these batteries, how to really try to make this mainstream, and it's not happening. And he put out a tweet that right before the event saying everything that they talked about yesterday on battery day isn't even going to be out until 2022. So that was kind of a holy crap moment. And a lot of folks sold the stock on that. And of course, selling begets more selling because that's the way things tend to work. So Tesla down 10% is dragging the market down. It really is. It's down another percent after hours. If you're watching the after hours ball game, which I am to try to get kind of a read the tea leaves on how tomorrow is going to go. Traditionally, big days like this have been followed by an up day. So that's why I say it's a market conflicted, right? The prudent people out there saying, gosh, it's time to take risk off. And I've been saying that for a couple months, which was early. I know that, but hopefully you've slept better during this time. I know I need to take risk off, and then I don't want to take risk off because I believe in America, and I believe I believe in vaccines. I believe we're going to figure this out in regards to who we elect. It's still just the president, and I don't want to belittle the role of the president. But as you freak out, if you're predestined to freak out going into the election, just like it was in the military, people are like, what was it like to serve under President X, whoever they didn't like, pick a name. It was like, largely I was not affected. Maybe we go into conflicts that we, largely day to day, you're not affected. So, don't go crazy over the election thinking that market crashes are coming. Things are going to get repriced based off of largely just the tax changes that we can anticipate. Realize even if Trump gets reelected, there's going to be some changes. Maybe an more aggressive stance towards China. Those things are going to add volatility to the market. But I'm going to show you how you deal with that with the rest of this presentation. So I'm going to just want to show you that life is good in some other things. I mean, Nike released earnings, plus 8% of a major retailer. Western Digital, not super huge, but again, making technological advancements that took their stock higher, released off of earnings today. Installing video at all of their terminals was kind of the headline to go with that. So there's good news stories out there. It is not all gloom and doom, but sometimes that's all you get when you're looking at the overall market. So I'm going to share out to you, this is a TD Ameritrade screen. Left, you see 3 panels. Left, you see the SPY, the S&P 500. So that was kind of the big move down today. And when I'm showing you this is everything moved down. So it kind of didn't matter what you had today. It was going down. There are very few names in the green. So this is the SPY in the dark blue, and then the light blue or purple, if you will, is after hours. So a little bit of a bump, but not much. So I'll keep an eye on it, and I'll be up early tomorrow morning to, the market's open at 4 Eastern. So I have to get up and kind of see where we're at to make sure we're not in the midst of a huge sell-off. And if it starts selling off, then I have to get active pre-market on going to safety for some folks. This is Apple, obviously a large move down and continuing to sell off after hours. This is Blackstone, what I would call a safe name. It's a dividend growth investment name paying like a 7% dividend. So, this is a, hey, I'm in retirement. Well, yeah, those got hit too. So just not as much. You look at this is down 1%, where Apple's down 4%, overall market down 2.5%. So I just want to paint that picture that everything's kind of following the same pattern. When you look at those charts, they're very similar. All right, but let's zoom out a little bit to, this is a 5-day look. When you think this was a huge move down, I want to just go ahead and point out that it's Wednesday, and the last time we were at this level was Monday, 2 days ago. So it's not that big of a deal because we were right here and actually lower on Monday morning. So price that in, that the past 2 days have been moving up, and that this is where we were at about 10 o'clock Eastern Monday morning. So the wheels have not fallen off the wagon. It just seems like it, right? Often that you forget the road to get where you are, but if you zoom out a little bit, it puts it in perspective. So look at that. Literally, we're where we were Monday. That's 2 days ago. So deep breath. Now, are we safe? No, we want to pay attention to where things are going from here, but realize the last time we were at these lows was 2 days ago. So not too crazy. So let's zoom out a little bit more. This is the chart from, basically it's an S&P 500. I know that the writing's pretty small for y'all depending on what you're looking on, but S&P 500 is here. This is a 1 year look with the red lines. Those are mid-month lines, but basically thinking out spaced out a month or so. We had the big run up into February where life was good. 2020, the wheels did come off of 2020 when the COVID, the lockdown and all that. Fastest move down in history, 35% in a month, basically. March 23rd was the low. I called lock and load on March 22nd, and then we screamed higher since then. I call that a V. Other people still argue there's different letters of the alphabet. I don't really care, and it doesn't matter. The fact is, even today, if you can see that little thin line, or if you can see my arrow, we're back to where we were. Basically, we hit new highs, and now we've sunk below the new highs, which is not uncommon. Yeah, if somebody said, hey, back in March, we were down at 220, and now we're up at 320, you would say, wow, that's great news. And now, but the fact that we've been in this uptrend for 5 months, and now we're selling off a little bit of reversion to the mean here. Yeah, am I worried about that? No. I do think we settle in. People ask me all the time that we settle in from the 300. So I think there's more move down, another move down here as we go into the unknowns of the election. But we're not going to sweat it, and we're not going to freak out and make major moves in our portfolio. I think the market will settle into this 300 to 320 range until after the election. And it's just going to hang out. I don't like when it does it all in one day because that gets everybody excited. I would rather just sell off, 0.5% a day for a couple weeks, and that would get us to the same place. And with everybody not as concerned. But yeah, I think we settle into this range. We have the election. Again, a result is better than no result. So when you think about election scenarios, yeah, as long as we get a result, we can reprice everything based off of what we think now the new tax reform is going to look like, and go on about our American way, which means you and I living our independent lives and everybody kind of sub-optimizing to take care of themselves and their family, and enjoying a capitalist society where you can go out and make as much money as you're at least try to, as you want, and pursue happiness. That's kind of what it's about, regardless of who's in charge. So, but there's going to be uncertainty. So, tomorrow, sure, the market conflicted could go up because it generally has. You look at these big red down days and it has this huge jump the next day. I don't know. We could, either way, it doesn't matter. Don't get lost in the day to day. We're settling in my opinion, all the way down to this 300 level, which is not the end of the world. But yes, that's going to be a correction. That's over 10% off from the peak. So correcting going into a controversial election, yeah, that makes total sense. That's why we're into bonds, individual bonds. Again, if we started early, in the past 4 or 5 months, I've been buying a bond fund because I want that money able to now turn around and go back long. If you remember 2016, who was going to win the election? It was Hillary by a landslide. So very defensive going into the election. And I, like everybody else on the planet, except for a few that say, hey, I called it. And if good for you, maybe you did, maybe you didn't. But yeah, if you don't know how this is going to work out, right? And that's why you don't make these drastic moves, because the market could turn around and scream higher based off of, what happens. If Biden gets reelected and says, due to COVID-19, we're not going to touch taxes until, for 2 years. Okay, well, market screams higher, right? It's like, okay, worry about that in 2 years. I'm not trying to call that that's going to happen, but that's why you don't know what's going to happen. Generally, the Democratic administration will want to raise taxes. He's talking about it. But can you raise taxes in the middle of a pandemic, which we're still in? I don't know. I think there'd be a lot of pushback on that. So you got to hang in there and go with the flow on this stuff and just play it to the best of your ability. So that's what I'm saying, 300 to 320 level, which we're still above. So I'm saying it will descend into that level, in my opinion. I want to show you one last chart, and I'll get off the charts. for you. If you zoom out to a 3-year look, 3 years ago, we're at 250. We revisited it here when we tried to raise interest rates. This is December 18. We had well, it's the end of 18. Manifested itself in December of 18, which where he had those three interest rate raises off of zero. Couldn't do it. Market takes a big hit. We run up and basically recover for over a year, and then the Fed takes interest rates back to zero, kind of saved the day. I do think that was the right move in retrospect, even though it spooked the market, obviously. But now the Fed's saying, hey, we're going to be in interest rates lower longer. They're saying 3 to 4 years. I will say it's probably going to be a decade. I really don't see us getting out of this kind of cycle that we're in. That's a topic for another day. But as a government, I think we're in a hole that we're not going to be able to get out of anytime soon. But my point of bringing this chart up is 250 up to 320. Yeah, that's a 33% move up, which means this chart is an 11% on average move up in the market. So if you think 11% year over year, that is what the full market value gives you. I like to say 10 to 12% over the past 100 years. Now, if you check out with your portfolio during any of these times and you don't hop back in at the right time, then you don't get to just sit at home and collect your 11%, right? So when you think about, I'm going to cash everything out, now you can take some risk off and move some money to the sideline, but you don't want to take $1 million portfolio to the sideline because you're going to miss the recovery. So that's the point of showing you this chart. So times like this can be stressful. So was 2018, so will going into the election. But I honestly don't care because it's going to reset, revalue, reprice, and continue higher once we have a little more of the unknowns become knowns. So enough on that. Let me share back out to PowerPoint and I will conclude with some thoughts on the election. So there's other things out there. Second wave, Europe kind of went through this a little bit earlier this week. It caused a big 2% sell-off over there. It was Monday, I think, where they talked about, yeah, they might have to shut down again. Trump came out either yesterday or today, can't remember exactly when, and said, we're not shutting down again as a U.S. We may shut down pockets of things, but as a whole, we're not going to do that again. So that was good news as far as the second wave mentality. Bigger issue, where do you want to position for your portfolio for election? I've already done it, so I'm happy with where your portfolio is. If you are in the capital building phase, I've taken a portion of your portfolio to safety, but you've kept the Amazons, the Apples, the Googles, the Netflixes, Netflixi, whatever the plural is there. You're going to keep that stuff and you're going to take the ride, and it's going to be ugly numbers on big red days because it's tech, and that's why you don't get to collect all the big gains over time without a little pain along the way. So stay strapped in and keep your wits about you as far as needing to sell everything off, because you don't. Other issues, COVID-19 social unrest will pop up on time to time. I think that is an event-based sort of thing, which of course you don't know when the next event is going to be. Excuse me, but we're far from any answers on that. So that's another stressor for the market. We've talked about the massive debt we have. We're talking inflation as a theme. The Fed's even talking about intentionally increasing inflation because 2% plus is good. Topic for another day. I agree, but that's hard to explain to folks. Are we going to get this second round of stimulus? Is it going to be targeted? Is it not? I don't know. We'll see. I think we are probably going to get something. I don't know if everybody's getting checks in the mail again, though. Mark Cuban just called for it. So maybe as a political football, we might cut some more checks to people before the election. I don't know. A lot of it's a little bit insane. But yeah, you can always take risk off if you don't like where you are, if it's keeping you up at night. Call me, text me, whatever. I will make the moves in your portfolio so you are comfortable with what you own. You should be confident in your portfolio at all times. And if you're not, even if I am, if you're not, you're the important one. You're the customer. So call me, tell me you're not, and then I will take more to safety. Okay, so that's all on that. So that's what I have for today's presentation. Thank you for following along. I did in the show notes put a link. I do the morning briefing every morning where I'm live with a group of folks that pay for that information. I put the link down there. You guys can check it out for free in the next couple of days if you want to hear what I'm saying. And again, every morning I go through a market review. I go around the world. I talk to each headlines. I talk about long-term and short-term investment opportunities. That's what I do as a business to take care of your portfolio on a daily basis. So really what I'm doing is flicking the camera on and thinking out loud. Not everybody can be a client because I'm pretty close to maxed out. So that's where I'm pushing folks now that are like, hey, can you manage my portfolio? I'm like, nope. Too busy with other folks on that one, but you can hop in and see what I'm doing on a daily basis if you'd like. So anyhow, the Zoom link is down there. Again, you guys can come in for free if you want. Stop in for 5 minutes and listen and check back out if you want. Makes no difference to me. It's a resource for you if you are interested. All right, that's all I've got for today. Thank you so much for listening. Stay strapped in because the seatbelt fasten sign is going to stay illuminated for at least another 40 some days, right, until we get through the election. So with that, you guys have a blessed evening. We'll talk to you soon.